Old Mutual, as I said, missing forecasts with a 17% increase in 2011 earnings. Operating profit coming in at £1.61 billion. As I say, a narrow miss. Give us an overview of the period that was.
Look, I was very pleased with the way that we have performed this year. I think each of our businesses have done particularly well. As you know, Nedbank had a 26% increase in earnings announced last week. The life business in South Africa performed particularly well. We are growing very fast in the UK. Our assets under management were up 13%, which, given the euro crisis that pervaded Europe over last year, was very pleasing. And we're seeing signs of recovery in our US business as well.
Yep, let's hone in on the South African arm of the business that actually gave you support here, because as you said, Nedbank being noted. What does this mean for Nedbank and its position within the Old Mutual stable right now? Because there's still lots of speculation around when you'll be letting go of that 52% stake.
Well, I think the comment that I would make is, as you can see, Nedbank is a very good contributor to our profit. The management team are doing a superb job. They're absolutely following the group strategy where we want to expand more into Africa. And we're comfortable right now with Nedbank being a key part of the group.
Right now, those are the operative words, Julian. Let's look at where you've already seen restructuring coming through, you know, in part from the selling off of your Nordic life business, and your sprawling structure characteristic is now evolving to one of a simpler nature. Not to say that you haven't got exposure to Europe. What's the strategy at play in that regard right now that makes it low risk exposure, because it's still operating within very tough economic conditions?
Look, I think the most important thing is, you know, we sold the Nordic operation. We've got a very, very good price for that. And what that's enabled us to do is to improve our capitalization, make sure that now our structure is really very low risk. And as well as that, because over the last couple of years we've hit all of the restructuring targets we've set ourselves, as you can see, the tone from our release is that we are now focusing more on the opportunities for growth and less on the disposal of underperforming businesses.
We'll be getting into those growth prospects in just a bit and how you're looking to leverage growth moving forward. Looking at further rationalization, though, Old Mutual last year offloading its US life unit. It also has had that intention to float its US asset management arm. What's an update on that front? Because you've sold off two divisions within the asset management business. So are you still looking to list that business, or based on those two transactions, are you looking at selling operations off on a piecemeal basis?
Look, the focus we've had over the last couple of years is to look at the businesses we've got to make sure that all of the businesses fit. Our US asset management business is largely an institutional business. So we had a loss-making retail arm. So we dealt with that. We sold that to Touchstone. And equally so, there is the Dwight business, which really didn't fit into the types of businesses that we wanted. And so that has been disposed. We've also been looking at our cost base and spent a lot of time looking at why our investment performance is low. And so therefore what we have now got is a business we hope has turned the corner. Certainly it had a very good fourth quarter, the best quarter in 2 years. And therefore we're beginning to see the signs of growth coming back. When we get that growth coming back, when we get the margins up, then we will look longer term whether the conditions are right to do an IPO. But it's not on the agenda right now.
For now, are you happy with this operation and the way it is right now, that it's right sized and that you're extrapolating most cost synergy at this point?
Yes, I am. Often we've changed a number of people. We've got good management. They're doing the things that we believe that they need to do, and they've been executing well. So going in the right direction, not there yet.
So let's look at how you're planning to put your stronger balance sheet to work so that you do get there. I mean, you've highlighted that now's the time to be expanding into Africa. What makes it the right time, and how exactly are you looking to pursue this strategy?
Well, first of all, we've got a really good footprint already in a number of the African countries. Fairly mature businesses that the group has owned for a number of years. We bluntly have been using our spare capital in the group to repay debt. Now with the Nordic transaction, that is now been put aside. We have dealt with it, so we can look at opportunities where we think there's growth. And we believe that the African market is largely untapped. People have been focusing on the Far East and the growth prospects there. But there is a transformation taking place in Africa, and I believe there is no better group than Old Mutual in trying to make sure that we actually tap into that growth. So we will take the expertise that we've got, we'll take the systems, we'll take the distribution net that we've got, and look to grow in certain selected African markets.
In that growth process, I mean, so are you looking at becoming more aggressive in your current operations, or are you looking at a more organic or acquisitive growth even down the line?
We would be happy to have acquisitions. You know, a few weeks ago we announced that we had bought Oceanic Life in Nigeria. You know, Nigeria's growth is over, growth of GDP is over 8%, but equally so, the insurance penetration in that market is very low. So we have got a distribution agreement with EcoBank with their 600 branches in Nigeria. That distribution agreement lasts for 10 years. And so we believe from, yes, it is a low base, from a low base, over the next decade, we think we can grow a substantial business.
Julian, what's interesting is that if you look at your life assurance sales, specifically in the mass foundation market here, I mean, which is a market you'd be targeting more so in African markets, is because of its entry level, we saw a slight drop off in the fourth quarter. Is that just you know, a normal seasonal effect that came into play, or are you really experiencing pressure in that mass foundation segment of the market, because that one would assume would influence some of your strategy coming into a market that presents itself in Africa?
Even with a slower fourth quarter, we're still delighted that we're getting the growth that we're getting out of the mass foundation cluster. We've had very, very strong growth. We believe that that will continue into 2012. And you're absolutely right. It is those types of products, that type of distribution that we think will play quite well into Africa. So, you know, pleased with the way that that business has performed, and we're pretty confident it'll have a good 2012 as well.
Well, Julian, certainly the markets today seeming to be pleased with your dividend announcement, and that special dividend, more importantly. Thanks so much for your time this afternoon. Julian Roberts is CEO of Old Mutual.